Few investing strategies are as popular as stock dividends. Even Lincoln loved him some dividend stocks. Okay, maybe not so much, but by the end of this video, you'll have 4 factors you can use to find dividend stocks that not only put cash in your pocket, but that regularly increase their payout. In fact, I've used these 4 factors to build a portfolio that provides a 4% annual cash return plus double-digit price returns every single year. We're talking dividend investing today on Let's Talk Money. Joseph Hogue with the Let's Talk Money YouTube channel, where we're creating the financial future you deserve. I want to send a special shout out to everyone in the community. Thank you for taking a part of your day to be here. If you're not part of that community yet, just click that little red subscribe button. It's free and you'll never miss an episode. Dividend investing is one of the few strategies to consistently, year after year, beat the rest of the market. A famous study by Ned Davis Research over nearly 40 years of stock market returns showed that companies that regularly increased their dividend payment blew the rest of the market returns out of the water with a 9.5% average annual return. Even stocks where dividend payments didn't increase regularly returned an average 7.2% over the period, way above the 1.6% return investors got from stocks that paid no dividends. I'm going to start off with the basics of dividend investing, like what are dividends, but then I'll share 4 factors I use to find dividend stocks. Now, you won't find these 4 factors on any stock screener. You won't find the strategy on any website, but that's why it offers those solid returns every single year. I'll also walk you through how to use these factors to find stocks on any online investing site. This is just part of what I talk about in Step-by-Step Dividend Investing, a complete guide to dividend stocks and income investments. In the book, I not only reveal the strategies that will create a portfolio of dividend-paying stocks, but I also walk you through investing in other income-producing assets that provide more cash flow at lower risk. So I'll talk a little about what are stock dividends and why dividend investing is such a major part of my portfolio, but I really want to get to those 4 keys to finding dividend stocks. It's important to understand those basics of dividends, but it's so much more fun to talk about finding those stocks that are going to put cash in your pocket every few months. In fact, if you're already investing in dividend stocks, I'd love to hear about your favorite strategy or your favorite dividend stocks right now. Just scroll down and let us know in the comments below, how do you find dividend stocks and your 1 or 2 favorite picks. So any successful company has a choice for its profits, either reinvest for growth or return those profits to the owners. In the early years, when management is laser focused on growing the business, everything might be reinvested. But over time, more and more of those profits start going back to owners or shareholders of the company. That's exactly what stock dividends are, pure and simple. Dividends are your reward for investing in great companies. Most companies pay dividends on a quarterly basis, so once every 3 months. Now, management reports to the board of directors about cash flow and business growth, then the board approves a cash return to investors. Now, this dividend decision is hugely important, and most investors don't realize this, but paying a dividend is a big decision by a company. You can't just start a dividend and not be able to maintain it, because investors are going to come to depend on that cash payment. Paying a dividend means planning out years in advance to make sure the company is going to have the cash flow to maintain and even increase that payout. That's one of the biggest benefits to investing in dividend stocks, that stability and what it means to the company's management. Management knows that it has to produce that cash flow to meet this dividend, or there's going to be hell to pay. Studies have proven this, that companies that pay a dividend are less likely to go after projects with questionable returns or to make those expensive acquisitions of other companies. Management is forced into this good stewardship of your money, so there isn't as much free money sloshing around, so management has to reinvest it more efficiently. That's a great advantage of dividend yielding stocks, but the best benefit is just that higher return on your investment. Dividend stocks offer higher total returns than other stocks, not only from the cash payment, but on price returns as well. That cash payment from dividend stocks is a big part of the total return from stocks. In fact, in decades going back to 1940, dividends have accounted for as much as half the total return on stocks. That means not understanding dividend stocks or not using them in your portfolio, you could be missing out on the best part of the market. I love talking about dividend stocks, and we could easily go for hours talking about why dividends need to be a part of your portfolio. But what I really want to do is get into those factors I use to look for dividend stocks. because just throwing your investment in any stock that pays a dividend isn't going to get you those sweet returns. In fact, there's a lot of dividend stocks out there that are more risk than they're worth, and where the cash payment is at risk of being cut. So I want to show you the 4 factors I look for, 4 factors that helped me get a 4% cash yield on my portfolio plus double-digit price returns. That's a dividend yield twice as high as the broader market and price returns every single year. First, and this isn't one of those 4 factors, but it's extremely important, you have to understand the trade-off between dividends and growth in a company. And once you understand that decision management has to make with paying the dividends or reinvesting profits, then you can look for these 4 factors that are going to help you get both cash and price return. The idea is to find companies doing both, returning cash to investors through the dividend, but still with the capacity to reinvest and grow the company. So let's look first at these 4 factors, and then I'll show you how to use them on any online investing site. My first dividend screen here is to start with stocks paying a 3% yield or higher. So the broader market pays about a 2% dividend, so anything lower than that 3% and I'm not interested. A dividend yield over 3% tells me that the company is serious about cash return to investors. The next factor I look at is the payout ratio, which is just the year's dividend divided by the earnings per share. More accurately, you should be looking at total dividend payments, maybe divided by cash flow from operations or operational income, because it's just a pure way to look at the company's earnings power. I like to use cash flow from operations because it's less easily manipulated by management than earnings. Anyway, you want to see a company that's paying out less than 60% of its earnings per share as dividends. I know that you're looking for these high dividend returns, but we have to get back to that trade-off between dividends and reinvesting in the business. A company returning more than 60% of its profits, its earnings as a dividend to investors, just isn't going to have the cash left over to grow. Remember that long-term average return from companies that regularly increase their dividend payment? It was 32% above even the average return on companies that paid a dividend but didn't regularly increase it. While saving some of those earnings back is how they grow and increase their dividends. From this list of high dividend payers and companies keeping something back for growth, you check the dividend history over the last 5 years and especially through that most recent recession. This is our third factor and one of the best for long-term success with dividend stocks. It's one thing to pay a dividend when the economy is on solid ground and business is booming. It's something else entirely to commit to that dividend history even in the bad times. So I'm looking for stocks that increased their dividend regularly or at least kept the payout stable through the last recession. Our final factor, and this is one that is almost universally overlooked by dividend investors, is that I like to look at the cash yield on the buyback program. So besides returning cash to investors through a dividend, companies can buy back their own shares. They use that extra cash to take shares off the market, and a lot of investors don't realize this, but that is also a cash yield just like dividends. Taking those shares off the market means that profits are spread across fewer shares, so those shares of stock you own become more valuable. In fact, over the last decade, these share repurchases have become a big part of total cash return for investors. Companies in the S&P 500 are returning about $400 billion in dividends to investors every year, but are also buying back over $600 billion in shares. Finding those companies with aggressive share buyback programs is how I get those double-digit price returns every year, even on stocks that pay out a 4% dividend yield. Now, you're not going to find all 4 of these factors on a simple stock screener, and that's what makes them so powerful. I'll show you next how to get started and how to find each of the factors, but there is going to be some legwork involved. You can't just plug these into a website and expect it to spit out a couple of great dividend investments. But the fact that you can't find these factors in any stock screener is why it still works in producing those returns year after year. So here we are on the stock screener at Morningstar.com. Now you can use these dividend factors on just about any online investing site, but I like to start my search using the screener on Morningstar because it just narrows down the list faster. Here I'll search for stocks that pay a dividend yield of 3% or more. So these are going to be the companies that are really committed to returning cash to investors. So I scroll down here to the dividend yield percentage, make sure this is greater than or equal to, and enter a value of 3. Next, I'm going to scroll down again to the dividends section, and I'm going to find payout ratio and set this to stocks that pay less than 60% of their income as a dividend. So payout ratio, trailing 12 months, set this for less than or equal to, enter a value, and just enter this as 60 for 60%. Finally, I'm going to scroll down again, and there's no screen for dividend history, but I can look for dividend growth, or companies that have increased their dividends over the past 5 years. So I'm going to go to dividend growth percentage over the past 5 years, set this to greater than or equal to, enter a value, and I'm just going to say 5%. So this is going to find me companies that have increased their dividends approximately 5% or more every year over the last 5 years. Now 222 stocks, that's still a pretty large list, but here's another very important secret to dividend investing. If I were to just look at things like dividend yield and payout ratio, then the majority of stocks I see are going to be in very few sectors like utilities, consumer staples, and telecom stocks. These types of companies, just by the virtue of the business they're in, tend to pay out higher dividends than others. So if I just invested in companies from this list, my portfolio is going to be overexposed to those very specific sectors. And what if new regulations are passed that make these sectors less profitable? Or what if something in the economy changes and these types of businesses are hit hard? My portfolio would be destroyed. You need to invest in dividend stocks from different sectors. That way you get diversified payouts, and a hit to any one or a few sectors isn't going to ruin your portfolio. So I go back into the screener, I click the drop down and go to stock sector, and then I just work through this list of starting with basic materials, click OK, and you see that narrows the list down a lot. Now I only have 18 stocks to look at. I click on the results to see each one. Now if I click through, I have a short list of stocks I can check for on those 4 factors. Understand the screener here only looks for yields that are above 3%, a payout ratio below 60%, and dividend growth. So you have to look into each of these individual stocks to compare them against each other. You can also look to see how much each company is returning to investors through that share buyback program. There are 11 sectors you need to look through, so narrowing your list down in each sector is going to take a few hours, but this is the work that will earn you higher returns. If this was something that just took a couple of minutes, then everyone would be doing it and no one would make any money. This strategy is going to get you started dividend investing, but if you're really serious about that cash return, check out the link in the description below for step-by-step dividend investing. Now, I not only detail everything you need to find great dividend stocks, but I show you how to find solid investments in other income-producing assets like master limited partnerships and real estate investment trusts. In fact, these other assets can produce higher income yield and return with less risk than dividend stocks. Diversifying your portfolio in dividends, MLPs, and REITs maximizes your cash return while minimizing your stock market risks. This has been a longer video than usual, but I love talking about dividend stocks, and I think it's a great opportunity for investors. Use the 4 factors to find your dividend investments, and I'd love to hear your dividend investing strategies. So scroll down and let us know in the comments how you pick dividend stocks. Join us in the Let's Talk Money community by clicking on that subscribe button. We're here Mondays and Wednesdays with the best videos on beating debt, making more money, and making your money work for you. If you've got a question about investing, just scroll down and ask it in the comments, and we'll make sure to answer it in a future video.